Good evening, depending on where you're at in the world. My name is Marc Pickren, and I am the CEO of the Americas for TurnKey Lender, a loan origination system, loan management system based here in Austin, Texas for the West. Also have offices throughout the globe. First and foremost, I want to be respectful of your time in terms of the invitation said that we're going to try to keep this to about 15, 20 minutes. And I want to make sure that I'm trying to be respectful of your time today. So let's jump right in. In 2022, any business anywhere in the world can finance their users, their clients, or their customers. This has particularly been seen in terms of the emergence of buy now, pay later platforms on online shops and retailers. Once again, the cat's out of the bag. Any business anywhere can become a financing as a service within their organization. I'm going to be very direct. The traditional finance sector, more or less Wall Street, is going to try and scare you that you should leave this up to the professionals and pay handsome sums of money for the right of financing your customers. And I want to emphasize your customers. And so when you partner with a third-party financing company, oftentimes you are giving up a lot of information and giving up the opportunity to build customer loyalty. We work with a large number of specialty finance companies that do great services and are upgrading their systems using TurnKey Lender. And that's a route that can be taken as well. That's certainly with 12% of Americans having some sort of signature personal loan, it's certainly a good opportunity for consumers to work with those customers as well. But quite frankly, since it's 2022, there's no reason for you to be concerned about the risk associated with doing embedded lending, because quite frankly, the advanced decisioning engines that are available today using artificial intelligence and pulling in up to 250 data points really allows you to build your own credit policy and your own credit scoring system that really mitigates that risk. And let's talk a little bit about the two things that most people are going to try and scare you with, and that is the decisioning engine. Credit policies are built leveraging relationships with credit bureaus. You can pull in cellular phone data. You can pull in IP address location from where they're making the application. And you can put in place all types of guardrails in order to prevent fraud or a risky customer from going through to underwriting. It's often said that it's easy to loan money to people. It's not as easy to collect. And so that's the part where you really want to partner with someone as far as a loan origination system or a loan management system that has an advanced decisioning engine included. It's really quite simple to set up credit policies. There's been so many proven models that are available off the shelf with like a TurnKey Lender or with another provider, or you can create your own decision policies because of the machine learning. So you originally start with a certain decision or credit policy, and then that slowly evolves with your customer base, or quickly evolves with your customer base in terms of you being able to underwrite the right customers and charge the right amount of interest if that's the route that you want to go. So let's talk specifically about why you should consider embedded lending and where it's offset. When I talk to potential prospects, number one, the reason why that they're looking for a relationship with a provider such as TurnKey Lender or one of the other great software products that are out there. Number one is the fact that they want to be able to keep the personal data of their customers within the organization. And so that way you can provide bespoke, custom product fit and regain loyalty and repeat business from your customers as opposed to selling them off to a credit card company or somebody else. Number two, as I think we'll all agree as managers and executives in 2022 and beyond, we're all being required to look at OPEX reductions and or keeping our OPEX at a static and not having to rely on really experienced and expensive employee base that is oftentimes churning at a high rate these days. So, you hire an expensive staff and then they're gone in 6 months, which creates, havoc within the organization. And so with a product like TurnKey Lender, you can, once it's deployed, you can really run and build your own configurations and workflows and different credit policies going forward with a lower cost employee base that could be trained from your existing staff. Really, all you have to do is have a good command of SQL. Also, let's look for the potential for sales velocity. We have customers that actually don't charge interest and allow a buy now, pay later opportunity, just because at cart checkout, they can say, if you add an additional item and or let's say $500 to your cart, will allow you to have the opportunity to pay over time and maybe just break it up into 1 or 2 payments. And that really gives them a differentiated value prop in the marketplace. And we also have customers that make a healthy income off of the interest income charged relative to allowing their customers this opportunity. Also at scale, and this is research proven, at scale, an embedded finance or a finance as a service within your organization can contribute 1/3 of your profits and or 50% of asset value. So if you're thinking of even as a small company all the way through to a larger concern, what it would be like to be within your organization, to be the person that brought to the table an increase in net income and or EBITDA by as much as 30%, additionally increasing the asset value or the valuation of the company by as much as 50%. And that's been proven time and time again in terms of embedded finance, which is nearing a $1 trillion TAM, and has been proven out ever since the days of like GE Finance financing jet engines and healthcare, medical healthcare equipment. In fact, the medical healthcare industry is a really good place for embedded finance because of the specialization of the medical equipment and the cost and expense of it. So a couple of questions that I think that I would suggest, and so here's the quick hits in terms of embedded finance. Number one, you got to talk about what is a lending system. You have an application, you have a decisioning engine, and you should make sure that decisioning engine is included in your subscription. You have underwriting and documentation, you have servicing, and you have collections. All of those should be held in the cloud. They should be all digital, and they should all be able to be run simply and effectively, almost on their own, with limited touch from employees. You can have employees looking at underwriting for exceptions or special situations, but at the end of the day, it should be all encased in an end-to-end solution. And we're pretty proud at TurnKey Lender to say that we're one of the leaders by Gartner as well as other reviews in terms of offering one of the only end-to-end digital solutions available in the marketplace. I want to also emphasize that, as I said at the very first, it's simply rubbish that you cannot take the risk out or lower the risk to be offset by the cost-benefit analysis of doing lending yourself or finance as a service. And you should really pay special attention to the skill set behind the decisioning engine. We've grown up. One of our founders, started TurnKey Lender 7 years ago, creating those artificial intelligence decisioning engines, and we've evolved the company around that to be end-to-end. And so make sure that it's not just a company that's gone out there, a software company, and hired a few PhDs to try and develop a machine learning and haven't really been able to prove themselves time and time again as to being able to process a large volume of loans and to be able to do so at low risk. And as you look at a lot of the companies out there that are like the Firms of the world or the Elevates of the world, a publicly traded company, a lot of their market cap is based upon the value of their decisioning engine, which they've evolved over time. And The great news is that you can basically enter the market and be ahead of or on par with companies that have been doing this for a number of years. And so I would really suggest focusing on the decisioning engine. I wanted to keep today, somewhat short to be respectful of your time. There's a couple of other questions that typically come up, like how do we balance sheet these loans, or do we work with a partner? Do we sell these into the secondary market? And then how do we control SLAs with our servicing partners to make sure that our clients are receiving a good experience? I can't go into all of those in this segment, or I would be violating my commitment to be respectful of your time. But I invite any of you to reach out to me with a personal message on LinkedIn, and I'd be happy to engage in a conversation with you about opportunities and options. And once again, this isn't a sales pitch just for TurnKey Lender. Look, if you are interested in embedded finance, shop around. Look at other offerings in the marketplace. There's good providers out there. We just happen to think that we have kind of an edge based upon our history. And as an ending statement, TurnKey Lender has been in business for 7 years. We have customers in 50 countries, and we process in some situations as many as 30,000 transactions a day for one client. So we're battle hardened in terms of being able to prove that our systems work, and we have a good client roster that we've solving a lot of really complex solutions. I'd like to give a shout out at the end as well. One of our clients just recently had a significant raise and is involved in the social good, Isuzu, and I'd like to give a shout out to those guys because they're doing some great work in terms of helping underserved populations be able to report people's rental payments on time to the credit bureaus so that folks can build a good credit folder and potentially move up in terms of the residential market and be able to own their own homes someday and not constantly be caught in the trap of renting. So really, social good and trying to help folks to solve complex solutions. We work with a number of community development financial institutions that are charged with lending money into underserved populations. So just want to give a shout out to those companies that are working with us. We really enjoy the social good aspect of what we're able to do. But as it relates to generating increased profit, customer loyalty, and easy return on investment analysis, we'd love to talk with you guys. So I'm short on time here, about 12 minutes and 44 seconds. So please feel free to reach out with other questions that you may have. But I hope that this was informational and a good use of your time today. And would love to have a conversation about, going forward in terms of any of the questions that you may have.